This video is an Uncover Japan company research report on Optorun, ticker 6235. Optorun makes the vacuum coating systems that place nanometer-thin optical films onto smartphone cameras, automotive sensors, and emerging AR and VR lenses. It is the global #1 in this narrow equipment market. That quality is real, but so is the cycle. Margins have reset sharply, and the investment case now depends on whether management can deliver the recovery it has guided. The snapshot captures the tension. On depressed fiscal 2025 earnings, Optorun trades at about 31 times forward earnings and 2.14 times book. Its equity ratio is a sturdy 66.6%, so this is not a balance sheet distress story. The problem is profitability. The operating margin fell to 9.8% after exceeding 20% earlier in the cycle. The market is effectively asking whether that margin can normalize and how much recovery is already priced in. What does the product actually do? Inside a vacuum chamber, Optorun equipment deposits dozens of precisely controlled layers onto a lens or optical surface. Those layers reduce reflections, filter infrared light, improve durability, and control which wavelengths pass through. Modern smartphone cameras may need more than 80 layers. Optorun supports 4 deposition technologies, including its established ion-assisted systems and a newer atomic layer deposition platform aimed at semiconductor optics. Customers buy a production line, not a consumer gadget, so orders are large and tied to capital spending cycles. The application mix looks reasonably broad. Smartphone and camera lenses are estimated at about 45% of fiscal 2026 sales. Automotive and sensors at 20%. Semiconductor optical ALD at 15%. And biometrics, AR, VR, components, and service making up the rest. But the demand base is more concentrated than this chart suggests. Roughly 65% of sales go to China, where much of the global optical component supply chain sits. That gives Optorun scale and customer intimacy, but also exposes orders to Chinese smartphone capex and geopolitics. Optorun's moat combines vertical integration with process know-how. It designs critical components such as ion sources and optical monitors in-house, then tunes the entire system to a customer's exact coating recipe. Once a mass production line is qualified, replacing it is expensive and risky because downtime stops the customer's own production. Maintenance, modifications, and consumables add a stickier after-sales layer. These advantages support global leadership and high historical margins. They protect market share, but they cannot force customers to order new machines when end demand or capex weakens. The 5-year income statement shows why the shares are difficult to value. Revenue rose from 30.9 billion yen in fiscal 2021 to a peak of 36.8 billion in 2023, then settled at 33.9 billion in 2025. Operating profit, however, fell from 9.8 billion at the peak to 3.3 billion. Net income dropped to 1.8 billion, roughly 72% below the prior year. Revenue did not collapse. The economics underneath it did. The balance sheet is the stabilizer. Even after the earnings decline, the equity ratio remained above 66%. Return on equity, though, fell from the high teens to just over 5% as profit collapsed. This combination matters. Optorun has the financial capacity to keep investing through a weak period, but investors are not being paid with strong current returns on that capital. The balance sheet lowers the risk of a funding problem. It does not by itself solve the margin or valuation question. Cash flow confirms that fiscal 2025 was a genuine trough, not merely an accounting issue. Operating cash flow fell to roughly 3 billion yen, while free cash flow narrowed to about 1.2 billion, as lower profit and working capital pressure moved together. The company still generated cash and retained financial flexibility, but the cushion is much thinner than at the cycle peak. A credible recovery should therefore show up not only in reported operating profit, but also in conversion back into operating and free cash flow. Management's strategy is ambitious. Move from 33.9 billion yen of revenue toward 50 billion in fiscal 2027 and 80 billion by fiscal 2030. The path rests on established optical coating, diversification into automotive and AR or VR, and commercial liftoff for the newer ALD platform. 2 proofs matter most. The guided fiscal 2026 rebound must appear in orders, margins, and cash. Second, ALD must become a volume business rather than an attractive technical option. Progress on both would reduce dependence on Chinese smartphone capex. Valuation needs careful handling. The headline forward price-to-earnings ratio is about 30.8 times, far above much of Optorun's own history. But that denominator reflects trough earnings. On a normalized mid-cycle earnings base, the report estimates something closer to 15 to 20 times. Neither framing should be used alone. The high headline multiple warns that a recovery is already expected, while the normalized view explains why the stock may not be as expensive as it first appears. Execution determines which denominator becomes real. The report's author estimated 3-year scenarios show the asymmetry clearly. The bear case is about 1,440 yen if demand stays weak, margins lodge near 12%, and new products slip. The base case is roughly 3,850 yen if targets arrive late, but the business normalizes. The bull case reaches 8,000 yen if ALD scales, new end markets broaden, and margins recover strongly. These are scenarios, not price targets or recommendations. Their wide spread shows how much the outcome depends on a small number of observable execution milestones. The conclusion is balanced. Optorun is a genuine niche global champion with a defensible technology and service moat, a strong balance sheet, and structural demand from increasingly complex optics. But current earnings are weak. China exposure is high, and the shares already anticipate meaningful improvement. The report scores Optorun 12 out of 20. The evidence to watch is concrete: fiscal 2026 margins and cash conversion, disclosed ALD volume sales, and design wins outside the traditional smartphone base. Those indicators will show whether this is a cyclical recovery or a longer reset. For a much deeper look, visit the free deep dives at uncoverjapan.com. We go beyond the headline numbers to cover the business, financials, valuation, risks, and catalysts. This video is for information and education only. It is not investment advice or a recommendation to buy or sell any security. Always do your own research.